We're continuing to do question 23, which is about the comprehensive shareholders' equity transactions. And what we're going to do now is prepare the shareholders' equity section of the balance sheet as of October 31st, when the net income for the quarter was $23,000. So it would start with whatever the name of the corporation is. We would write balance sheet, shareholders' equity, because it always is good to have a title that tells you what you're looking at, and the date, which is October 31st of 2010. We know that there's two sections to shareholders' equity. There's contributed capital. So let's do that one first. And there's two accounts, or there's three accounts, but two types of stock. Oops, sorry about that tricky mouse. So we have preferred stock, and preferred stock has a balance of $500,000. There is no paid-in capital preferred stock, so let's write down preferred stock. We know that we have to disclose what the par value is, which is $100 par. And we also have to disclose the dividend, which is 6%. And we also have to state how many shares are authorized, and according to the problem there were 10,000 shares authorized, and issued and outstanding are 5,000, because in our journal entries those were the ones that we sold, issued and outstanding. So the total is, according to our account balance, $500,000. We also have common stock, where there are quite a few transactions, but I have to disclose that it was no par, but it has a $2 stated value. And remember that stated value was set by a vote from the board of directors. And according to the problem, there's 50,000 shares authorized. And if I counted up correctly, there's 23,000 shares issued, but there's only 20,500 shares outstanding. And that's because some of the stock is being held by the company itself in its treasury stock. So let's look at what the balance is in common stock. And in common stock, we have a balance of 46,000, and in paid-in capital, we have a balance of 330,000. So filling that in, common stock is 46,000, and paid-in capital for the common stock, you can call that paid-in capital in excess of stated value if you want, is 330. So total contributed capital from outsiders, or outside investors, totals to $876,000. We also have retained earnings, and since this is a brand new company, the retained earnings is the profits for the year, and the profits for the year are 23,000. Oh, did we pay dividends? We did. So retained earnings is going to be the $23,000 minus the cash dividends. And the cash dividends, remember, were $9,550. So remember, dividends are paid out of profits or retained earnings. So that's going to reduce my ending retained earnings to $13,450. So to say again, we had profits, brand new company of $23,000, but we paid out dividends of $9,550. We also had treasury stock, so I need to write less treasury stock. And you'll recall we have to disclose how many shares, so there's 2,500 shares. And the cost of our treasury stock was $6,500. So I need to disclose that or subtract it out. So total shareholders' equity comes to $882,950. 882,950. So that is total stockholders' equity as of October 31st.